All right, we are live. Made it to another Thursday. All right, I think we got an interesting one here today. Let's finish getting set up. And if you don't know already, we are talking about what is going on in the wonderful world of banking and the US economy, as well as more specifically how it potentially could be affecting Jamaica. Short answer is that it will, and that's the conclusion. At least I wouldn't say conclusion, but that's the way things are looking, I would say. And have a few articles here to get us started off with, and just kind of, I think it's important to build context and not assume everybody knows what's going on and what's happening. So I know a lot of people, the community here, everybody, I won't say everybody, but most people here are very informed and up to date with what's going on in just the world of finance and how it will affect their own personal lives. That's a big assumption, but that's just kind of my feel of the community that we have here, is that people are well informed. But again, I don't want to make that big assumption. And so we will do a bit of a review of what's happening with the US banks and SVB, Silicon Valley Bank, and what happened with that. That'll probably just start us off, kind of hopefully get everybody on the same page. And then we can get into a discussion on how things will inevitably, I believe, will affect Jamaica, the economy, certainly interest rates at the very least, and get into the trickle down aspects of those circumstances. Of course, I don't know everything. I'm not an expert. I'm not a financial advisor. I want to make that all super clear.
I just realized I was on the wrong mic. I hope everybody heard that. Okay, so this should be much higher quality sound. So that should be a little bit better. But I was just hopefully you heard a lot of what I was saying in regards to just bringing context to what's happening in the financial sector. But as usual, let me know where you're chiming in from and what city, what state, what country, and I will go ahead and tee up some articles that I have here. And again, this is to really get everybody on the same page about the discussion that we're going into. And of course, if you've been paying attention, Silicon Valley Bank is the initial domino that we're speaking about here, and also there's a couple other, obviously a couple other banks that have fallen, and other larger banks are it's affecting them as far as like, and you kind of, when you see these stuff happens, is like there's been like a natural consolidation that has been happening, where people feel safer with the big banks and they start leaving these regional banks. And then what happened today is that these larger banks have decided to pool their money to save and make solvent some of these regional banks. I don't know the details of that in terms of, does that mean did they own them, or is like this, is it a small loan, like that sort of thing. But nonetheless, it's like the bigger banks are getting larger, and people are taking, like I said before, taking the deposits from smaller regional banks and going to the Chases, the JP Morgans, like those Bank of America, all those big banks. But yeah, we'll slowly get into these articles. Good to see everybody. Thank you for joining this Thursday live. I'm very happy we've been able to keep up with them the last, I would say, last month or so, and we're going to continue to do this for as far as I'm concerned. This is part of the weekly schedule. I enjoy these, and especially I think it's so good with in terms of like things that happen. Like we can, SVB's like failed on Friday. We talked about it a little bit on Sunday, and then we knew a lot of things were going to happen in the market on Monday, and it continues to roll out like every single day. Like I'm getting up, reading articles, catching up, and seeing what's going on. And then Thursday we have like a midweek or late week opportunity to talk about it and discuss it. And that's kind of the way like I see these things. We try to get some guests to come on, but unfortunately we just couldn't get anybody on to talk about this. But we will always try to make Thursdays as like a day that we try to get guests on. That's one thing that we're aiming for with the team. But today it's just going to be me and you, and just like usual, just like old times. So let's see where everybody's chiming in from. Esther coming in from Kingston. Good to see you. Thanks for joining. Howard's in Canada. Awesome. Keisha's in BK. Very nice. Hello, Candies, chiming in from St. Catherine. Yeah, it was raining here earlier as well. This late morning, early afternoon, it got some rain, and it rained pretty much all day yesterday. The sun is out now, which I know people who are visiting the grill, and they really appreciate that. Esther from Kingston, Jamaica. Yes, good to see you. Peter is in Eastern Pennsylvania having some bright skies. Good to hear. All right, let's get into the first article. So where should we start? There's so much that happened. And then so many different angles that we could take this. All right, so we'll read this one, and it'll bring context. I'll throw it in the chat. It'll bring context later in the article. So bear with me. Bear with me for a second. About maybe three or four paragraphs down, it like in one paragraph pretty much sums up what's happened here. So I'll go ahead and read it. I'll pull it up on the big screen as well so everybody can see it. And if you just want to listen to me read it, that's cool as well. All right, so this article is from Mrs.org. This came out yesterday. And the title reads, Silicon Valley Bank and the Failure of Fractional Reserve Banking. With the apparent failure of Silicon Valley Bank potentially causing a crisis in the American and even global financial system, we will be treated to a manner of explanations, very few of which will accurately state the cause of these troubles: fractional reserve banking. In modern banking, there is little separation between warehouse and investment banking. The downside of the investment banking is a potential loss of money, since no investment can be a sure bet. The upside is the potential for good return on money, the reward of taking a degree of risk. In warehouse banking, such as personal or business checking accounts, the customer is not expecting any loss due to actions taken by the bank. The service rendered here is not expert investment advice. Rather, it is secure storage of funds and seamless payment transfer. The customer expects all of his money to be available to him at any time. So this is basically the basic run-of-the-mill banking that me and you normal people would do. Rather than having to pay a small fee for services of warehouse accounts, depositors are in fact paid a small return for using these services. This is because modern banks lend out money stored in warehouse accounts. Since the warehouse depositor is entitled to access all his money on demand, the banking scheme requires the creation of new money out of thin air. Say the bank lends out 5% of the value of the warehouse account. They still claim to have 100% of the value of the account available to the depositor. In theory, this works if what the bank invested the 5% in was successful. The return on investment brings the real value of the warehouse account back up to 100%, pays a gain to the depositor, and pays a profit to the bank. Everybody wins. That is, assuming the investment is successful, which can hardly be relied upon. With the failure of the investment, the bank is now short 5% of the funds, both expected by and legally owed to the warehouse account depositor. The bank has to find a way to make up the 5% shortfall before the depositor realizes what has happened. Otherwise, the depositor will try to remove all of his money, recouping his deposit from the bank's reserves. We have been discussing only one account, but banks have many customers. We have also been discussing the relative prudence of a 95% reserve requirement. Say a bank has only 10% of their warehouse deposits available in cash. If its investments fail and it struggles to make payments, customers will scramble over one another to be the first to withdraw their deposit from the meager 10% the bank actually possesses. This is called a run on the bank and is the death spiral of a failing bank. The microeconomic situation has macroeconomic implications. The bank's creation of money increases the money supply, inherently lowering lending standards. Investments which otherwise would have been made typically fail and thus constitute malinvestment. Resources are misdirected, and during the time it takes to redirect resources into a new and sound capital structure, a recession occurs. In more prosaic terms, banks are the engine of economic growth as they make capital available for business investment banking. They are also the gas line as they provide a payment system, warehouse banking. Excuse me. If many banks fail, these essential services are unavailable, depressing the economy and the liquidity crisis, the beloved of the economic mainstream. The mechanism I've outlined above explains what happened in the case of Silicon Valley Bank. They did not have 100% of their warehouse accounts available in cash. The Federal Reserve dictated ultra-low interest rates for years. The Fed began raising interest rates. So this is exactly what happened. The Fed began raising interest rates in 2022 and 2023. SVB had extensive holdings of older U.S. government bonds, losing investments when the Fed begins to raise rates. Higher interest rates are also bad for startups in general. The losses mounted, and SVB failed to secure money to cover the shortfall. Customers caught wind of what was happening and rushed to withdraw their deposits. The bank was insolvent, and the regulators took over operations. Since SVB was the 16th largest bank in the United States and a key lender to the tech industry, one of the most important industries in the country, the outlook for the American economy is poor. Since all banks are intertwined in lending in one way or another, the outlook for the global economy is poor as well, with banking shares dropping internationally. The mainstream appears to understand the practical impact of fractional reserve banking without realizing the full implications. As equity research and analyst Alexander Yoakum said in his comment to the BBC, the issue was that people wanted money and they didn't have it. They had it invested in those investments were down. They had an investment and those investments were down. A single bank failure doesn't necessarily spell economic collapse. SVB is liquidating assets to cover deposits, which is the right thing to do. America also has the Federal Deposit Insurance Corporation, FDIC, which is a government agency that insures deposits up to $250,000. However, the FDIC is only a temporary solution, which makes things worse in the long run for the economy at large. The deposit insurance program institutes moral hazards and encourages risky behavior by banks. The solution to both bank runs and business cycles is to institute a gold standard along with 100% reserve requirement for warehouse accounts. We must foster the public understanding that we live in the real world, not a utopia, and thus all investments carry risks. To avoid risk entirely means foregoing any prospect of a return and paying for warehousing services rendered, just like paying for any other good. Potentially, banks with both warehousing and investment divisions could offer free warehousing or even a return on warehousing accounts that entice people to use their investment division over that of competitors. But the separation between divisions would have to be strict for this is not to be fractional reserve fraud against both the individual depositor and the public at large. Under this system, it would be possible to have economic growth, no inflation, no business cycles, and declining price level too. So I hope that brings everybody kind of in the loop. That I thought that was like a very, very good explanation of generally how the banking system works overall, and then specifically how that has affected SVB. And so I guess we'll get into my opinions in short order. Like one thing is just curious is just like, they've been Jerome Powell, the Fed's been raising these rates over these years. And this is like, all right, how could we have not anticipated this? And because these banks were holding these otherwise very, very safe treasury bonds. And I'm not sure if everybody knows, like treasury bonds, government bonds are like the safest investment that you can make. They are backed, and specifically US treasury bonds. They're backed by the US government. And I remember like in my first finance classes, I just remember like my professors just telling me, like, this is like, you got to be in this. Like, and at the time, this is like 2000, early 2000s. And if I'm not mistaken, they were paying under 1%, maybe at 1% or something like that. Basically nothing. And I just remember thinking, like, as a young person, as a young man, I was like, this is just too safe. This is nothing less than 1%. I don't want to invest in anything like that. But this bank, SVB, they invested tons and tons of money, like literally billions of dollars, into these otherwise safe banks, safe investment vehicles, the safest. But because the Fed was raising these interest rates over these years to try to control inflation, and as we know, inflation has been at an all-time high and continues, although it's coming down, but it was on the way of just continuing like crazy, and that could lead to a recession. But my question is like, man, didn't they know or have an understanding of who was holding these bonds, at least the large players, and that perhaps by continually raising them, it may cause maybe a bank failure, but certain industries to fail because these interest rates are going so high. And so I just wonder if they if they had known about, if they known or they knew this was going to happen and they let it happen. But I don't think so. Like, my conclusion is like, man, I don't know if these guys know what they're doing. Like, that's my conclusion at the end of the day, to have like, and to me, if I thought otherwise, then I become a conspiracy theorist, because the conspiracy theory would be like, they knew this was going to happen. They were going to set up these emergency meetings with Congress on Sunday and everything that happened over the weekend. And this was all part of the big plan. And then I'm like, no, my brain can't go that way, because why would they do that? To what end? So, that's one question that I had. I kind of just came up with it as I was reading through the article. Jane says, my understanding is that SVB didn't manage their interest rate risk properly. They went too long on the bonds in a rising interest rate environment. Right. So they made this decision, and we got to remember, you're right about that. That your understanding of what happened is correct. But we got to remember that when they bought these bonds, they didn't anticipate the rates would be rising so quickly. They made a lot of mistakes. Like, they for sure made a lot of mistakes, but nobody anticipated that interest rates would be rising at this rate. And what they should have been doing as well is, as rates were rising and they knew that the investments that they had in these treasury bonds were continuing to be devalued over the months. And we knew, like everybody, if you're in finance, like, when the next rate hike is coming, and you hear murmurs, and it's going to go up like half a basis point or whatever it is. We just know it's going to go up at some point in the future. What they should have been doing is really deleveraging their risk. And from what I understand is that they didn't have like a very, very important part in their organization, which is a chief risk manager. And that is like somebody who when their sole job is to assess risk in an institution, or in this case, in a bank, in this SVB bank. And that position wasn't filled. It hasn't been filled for about 6 months, from what I understand. And would they have caught this? Would they have began a deleveraging strategy to kind of offload a lot of their risk? would they have, and we'll get into an article that talks about this, would they have done a better job in communicating their need for money at the 11th hour? Because that's also what really caused it. At the end of the day, what caused the run in the bank is that they were trying to raise 20 billion. I think it was $20 billion just out of nowhere. And everybody was like, why do you need $20 billion all of a sudden? And so the depositors went and scrambled for their money, which they just didn't have in the bank. And that's what caused that announcement caused the run on the bank. And then that also what caused the collapse of the bank, and why the federal government had to come in and take it over and then guarantee that every single depositor's money, right? And so I guess that would segue us into the next article. And I thought this was pretty good. This is from the Gleaner. I believe I'm almost certain this is an opinion piece. I'll just read Veronica's comment real quick. So, Kevin O'Leary, aka Mr. Wonderful, states they are all idiots and he stands to lose millions, as the FDIC only insured up to 250,000. Right. So that's what they did originally, but now they're seemingly guaranteeing everything, and then there's a big Wall Street, and I guess we could get into this later, but there is also, if it hasn't started already, I know it's going to start soon, like the Wall Street versus Main Street argument, in the sense that these banks essentially got bailed out, and the U.S. government, that is not calling it a bailout. They're basically saying that they are, I guess they're apparently afraid of systemic risk, that if SVB failed, that would cause a domino effect. And I'm not arguing that there wouldn't be a huge domino effect, but at the same time, when you look at Main Street, the argument becomes you bailing out Wall Street again, and and at the end of the day, the people would be hurt directly by SVB would be some of the richest people in the world, some of the richest people in America. And it's really, you're saving the wealthy at the end of the day. That's the perspective that it can be looked at. But at the end of the day, it is for sure. Like, in my view, it's like, it's a bailout and the bank is being bailed out, even though it's not, even though it's like they're saving the depositors and not necessarily anybody who was invested in SVB, which is very, very interesting. But in this case, they're giving tens of hundreds of millions of dollars, guaranteeing hundreds of millions of dollars, the federal government, the FDIC. And there is also, like, this other article, I'm not sure if we'll get to it. The government is saying that this is not going to cost taxpayers anything, right? And right now it isn't, as long as the FDIC can maintain this, which they can't necessarily, like, when you look at it in terms of like how much money, I'm going to try and find the article now. It's like there's a total of $20 trillion in deposits in banks, like, throughout America. And the FDIC only has enough money to cover not even 1% of that, right? And what happens if they can't cover those deposits? Like, so this wouldn't happen, but if every single person in America was like, I'm scared, I want to go get my money, and FDIC is guaranteeing that money is going to be there, every bank would fail, right? Because the FDIC doesn't have $20 trillion sitting around ready to give everybody their money. And the federal government would actually have to hop in, theoretically speaking, if they are going to guarantee this money and pay those monies out, and that would come from taxpayer money. Again, another Main Street versus Wall Street argument, why don't we have money? We have money to do this and bail out the wealthy, but we don't have money for healthcare. We don't have money for our schools, et cetera, et cetera. And so that, that's something I guess we can get into at some point in time during our discussion here. But I know that's going to become more, and rightfully so. It's going to become more of a discussion because this is like, we can't find money to do X, but we find money when these banks fail and they mismanage their risk and they mismanage their finance and they get bailed out, right? Veronica says that's not a done deal yet because some of the investors are Chinese. What's not a done deal? The giving out, the guaranteeing the money. That's a done deal. In terms of the SVB being guaranteed their money, depositors being guaranteed their money, that is a done deal. I'm not sure if that's what you're referring to. Rampant Wonderland says, seems like there was some insider trading involved given the CEO sold the rest of his stock just a few days before the collapse. Right. And so I have an article that kind of speaks to that. They are doing, they are probing. Yeah, a lot of fishy things. They are probing that. I guess we can read that article as well. I didn't think we'd be interested in that, but sure. They are being probed by the SEC. Jeanette says, some of those depositors were businesses that had to make payroll. No paycheck affects Main Street. Right. I mean, and a lot of it was startups, and I definitely feel for those people, whoever they are, and they were able to make payroll and everything like that. I'm glad that happened. And Veronica says the average U.S. citizen has less than 250,000, so they are worrying for nothing. Right. So this is not going to affect most people. Their money is guaranteed, but it's to me, and like having been through like 07, 08, it's like the way I look at it, this is the first domino. And I'm not saying, and I'm not trying to fear monger or anything like that, but I am also not living in Wonderland, so to speak, with Rampant Wonderland. I'm not living in a false reality here. We've read this book before. We've heard this song. Like, let's not be aloof or try to think and pretend like everything is honky-dory, because it's not. And that's the other thing, is just like when I hear a lot of people especially like on certain news outlets that just are just so emphatic and so they know what they're talking about. This is going to happen. That's going to happen. And when you listen to then when you after the dominoes fall and after the consequences come into play, you look back at what they were saying, like, man, this guy's a real fool. Like, he had no idea what he was talking about. She had no idea what she was talking about. And so that's like my same mindset that I'm going into this. Is like, most people don't know what they're talking about. And like anybody who's at this point, anybody who's saying that like everything is fine, we're going to be okay, I'm like, no, like, talk numbers to me. You know what I'm saying? Like, those aren't going to lie. And talk to me and show evidence that everything is going to be fine through factual information. And I'm not sure if anybody watches Dream Kamer. I used to watch him back in college, and just like 3 weeks ago, however many weeks ago, he was, maybe 5 weeks ago. I'm sorry, maybe 3 to 5 weeks ago, he was advocating so heavily to invest in SVB. And this is a guy on television that's supposed to be this expert in finances and investing and stocks, et cetera, et cetera. And just 5 weeks ago, this guy was basically saying that you should if you haven't invested, you should invest now in SVB stock. It's undervalued, and it goes on and on and on and on. And like, how many people listened to that guy 5 weeks ago, whatever it is, and lost everything that they put into that? And of course, everybody invests at their own risk, and they know what they're getting into, and it's your money, it's your personal responsibility. But at the same time, you have this guy who's stouted as a subject matter expert that we all should listen to, and he comes into the room and goes on TV with all this confidence. And just a few weeks later, the very same investment, the very same bank he's telling us to invest in collapses. I mean, this is like one of the surest signs to me. This is like, you can't listen to these people. Like, you have to do, it's so important that you do your own individual research. And for sure, like the mainstream stuff, like once you start hearing that, and I'm not saying like don't trust it, just don't use it for investment advice for sure, because it's probably, once it's hitting there, more than likely it's too late. Keep up with it. But especially in dealing with this, it just tells me, it's just like, everything they say, I'm taking it with a huge, huge grain of salt, especially anybody who's going on television and saying that things are going to be fine, things are going to be okay. This is just a one-off situation. There are other people there. And I will get into an article that somebody is saying that this is not going to affect Jamaica in any way. Like, what? Like, are you serious? Like, there's no way. There's no way that something of this nature, this huge domino that has fallen, is not going to affect Jamaica. Don't think that. And again, I'm not trying to fearmonger. I'm not trying to stir the pot here. I'm a realist, and I am living in reality here. And I think it's important that we all live in reality here. All right, let's get through some more comments, then we get into the next article. Rampant Wonderstand says it actually would have affected all the employees at those startups that the bank with SVB, if they didn't guarantee the money, they wouldn't have been able to make payroll. Right? Yeah, exactly. But it's like, and like, so I put myself in the position of I'll put myself firstly in the position of an employee of a company that banked with SVB. That would have been terrible, and I would not have been that person. But it's like, at what point do you allow the consequences of the owners, CEOs of these companies? At what point do you allow them to feel the burden of their consequences and the decisions that they make? Because right now it's like, it's another situation where they've done these risky, bad investments. They're being investigated by the SEC. Somebody who's selling off millions of stock just a few weeks before. That's just fishy to me. Where there's smoke, there's fire. And seemingly nobody's going to get in trouble for that, right? They almost never do, right? They almost never do. It's great that they're doing an investigation and everything like that, but they continue to be bailed out. And I'm just like, man, these guys are always getting these special privileges at the end of the day. And then, so that, again, from an employee perspective, like, yes, I would want my money. I want payroll. I worked hard for that pay period, and I should be compensated accordingly. And it's not their fault either. It's not the fault of the tech startups who invested with SVB either. But somebody, we're going to pay for it. The economy is going to pay for this. And I don't know the answer to that. Am I saying that they should have failed? I don't know. I mean, I don't know. I just don't think that we can continue to bail banks out. Like, that's for sure. And like, every time this happens, a recession happens, that banks are being bailed out, right? So where do we draw the line? Hey, Shayna, what's going on? Nice to see you. Thursday and Sunday. Ramp says it would hit Jamaica from all different directions, Jay, heavily dependent on the U.S. It's not even would, it's how. It's like, there's no would or maybe it's going to hit Jamaica. It's how. Like, that's the way we have to think. Veronica says, by the way, the biggest banks are not the issue. It's the little community banks. So stay positive, people. Sure, but like, let's think of this in an aggregate. Let's think of this from a 50,000 foot standpoint. You're basically making the big banks bigger. That's what's happening here. As like I said before, there's a bunch of banks, JP Morgan Chase, Bank of America, they're bailing out the smaller banks. And this is something that has happened before, but what's happening is these big banks are getting bigger. Is that a good thing? I don't think so. I don't think so. I think regional banks are extremely, extremely important to the economy and local communities, as opposed to these big conglomerate banks that literally just look at you as a number. That's it. I'm not to say that the little banks, some little banks don't do that either, but you have more. I feel like you have more of a relationship that you develop with these regional banks, and they know you, and they can hopefully help you with whatever financial endeavor that you're going through based on knowing you for years and years and years. Janice says, Warren Buffett says that you find out who is skinny dipping when the tide goes out. At least more banks are shoring up their reserves. I hope so. I hope so. All right, let's get into the next article. I'll throw it there in the comments. Which one is it? All right, so yeah, let's get into communication. So this, make sure I sent the right one. Yeah, this one is from the Gleaner, and we'll add it to the stream there. And this came out first thing this morning. Basil Jarrett, the U.S. banking crisis communication lessons for us. All right, banks and financial institutions seem to be in a perpetual crisis these days. Employees theft, bank fraud, and senior management misconduct have all helped to jiggle public confidence in the safety and security of our savings, deposits, and investments. But the challenges being faced in Jamaica today probably pale in comparison to what we've seen happen in the U.S. these last few weeks, with the collapse of Silicon Valley Bank and Signature Bank, both within days of each other. To be clear, what has happened to these two large banks is in no way similar to what has transpired here in Jamaica, whereas we seem to be dealing with an upsurge of bankers with particularly sticky, well-manufactured and nail-polished fingers. Our U.S. counterparts seem to be contending with a different type of crisis, specifically the type that happens when too many depositors withdraw their funds all at once. Avoid contagion. These withdrawals, coupled with investment losses due to last year's rapid rise in interest rates, led to the closure of SVB and a ripple effect throughout the entire banking system, forcing regulators to step in to protect depositors. The move wasn't swift enough for Signature Bank, however, as their customers, now fearful of similar collapse, also made a deposit run on the bank, withdrawing over $10 billion in deposits in the process. What has happened at both SVB and Signature is, of course, a lesson for bankers and how not to over leverage themselves. But the ripple effect it had on lowering bank stocks and triggering a panic run in other institutions also holds valuable lessons in how to manage communication crisis, particularly in the very interconnected banking sector. When the Federal Deposit Insurance Corporation, FDIC, shuttered SVB, it must have known that a contagion-like effect would immediately be created with devastating consequences, especially for some of the smaller regional banks. Decisive action. In fairness, the U.S. Federal Reserve, the Treasury, and the FDIC did issue a joint statement that SVB depositors would have access to all their money and that U.S. taxpayers would not have to bear the cost. But despite the joint release, fears persisted, reverberating as far away as Germany, where investors watched nervously as the stock market plummeted amid concerns that more banks would be shuttered as a result. To my mind, the joint release was not enough. The moment that the decision to go into SVB was made, a comprehensive crisis communications plan should have been given top-level priority in order to prevent or at least mitigate the ensuing deposit run and the crisis of confidence in the banking system that it created. For the record, I strongly believe that by stepping in the way they did, U.S. regulators took the correct action necessary to reduce the risk of further bank failures and to reassure depositors of both SVB and Signature Bank. But I also believe that there were several communications missteps that ought to have been avoided, given that in times of crisis, more sophisticated communications is needed to drive confidence and assurance, not less. In that regard, SVB is even more culpable for the communications failure, which led to the events of the past weeks. Communications mistakes. Take SVB's decision, for example, to issue a sudden press release last week announcing that it was desperate to raise cash through a stock deal. This backfired horribly as the release made no mention of why the move was being made, or gave any other justification for the offer. This immediately triggered wary investors and depositors who were at once suspicious of the motive. In such an instance, a proper narrative should have been included in order to help give the situation context and clarity. In issuing the release, SVB also erred by focusing mainly on regulators, analysts, and other banks, and not their most critical stakeholder audience, customers. If they had done a thorough target audience analysis, they would have realized that these persons get their information mainly from wider, more tech-savvy sources such as Twitter and messaging groups, not from the press release and newspapers. The timing of the communications was also problematic as it came right on the heels of a collapse of another smaller bank, Silvergate Bank, which only serves to spook, be jealous out of already jittery SVB customers. Finally, as the worries grew and suspicion mounted, SVB went silent, only to be broken 24 hours later by the CEO's message to say, "Stay calm." 24 hours later, that was the last straw. By no means am I suggesting that if SVB did the things that I am recommending, then the entire crisis would have been averted. No amount of PR could have brought back depositors' money or saved their investments. But good crisis communications can help to salvage the unsalvageable and to slow the momentum just long enough to give you some breathing room to think, decide, and act. Most importantly, however, it can be critical to helping you recover more quickly and with more resilience. For those of us here in Jamaica, I hope that we are watching and learning from these mistakes. Major Basil Jarrett is a communication strategist and CEO of Armitage Consulting, a communications consulting firm specializing in crisis communications and reputation management. So I thought that was an appropriate article, and he's not a finance guy or anything like that. More talking on communication, but breaks down what I thought in a good way. I think he broke down what happened and the errors in communication that took place, especially on the SVB side. Yeah, let's get into the next article. Let me go to the comments real quick, and then we can get into the next article. Kick Rock says, "This is why I wish Jamaica realized that they did not and should not have never linked with any first world country begging for money and becoming indebted to almost all countries. Jamaica has too much to trade and export, including real estate, to beg another country for anything." We do need cash, though. We do need cash. We do need investments. I agree with you. I wish we had more exports going out of Jamaica. I wish we had more of manufacturing at this in Jamaica, but we don't. I believe that is really a big part of that is really due to the high electricity, high utility costs here. But I do wish we had more manufacturing and more exports, but we don't. All right, let's slowly start moving into the effects. How could all this affect Jamaica? Let's start moving into there. So this next article, let me throw this in the comment section there. And this is from Radio Jamaica News. And this is on Tuesday, so a couple of days ago. And says U.S. bank failure should not affect Jamaica. Stokes, Dr. Christopher Stokes, development economist. Development economist Dr. Nelson Chris Stokes says he expects the effects of the run on two banks by depositors in the United States to be contained. Dr. Stokes told Radio Jamaica News that it was unlikely that there would be a spillover of what's happened with the U.S.-based Silicon Valley Bank and Signature Bank in the Jamaican market. The Jamaican economy and regulatory environment are more resilient, and therefore its banking system is not as vulnerable as it might have been some time ago, he said, pointing that out that on Monday, the U.S. government announced its intervention in Silicon Valley Bank and Signature Bank, with the Federal Deposits Insurance Corporation taking over the management of the entities. The intervention means deposit holders with the institutions will be able to collect funds as normal, even if sums exceed the usual coverage limit of 250,000 US dollars. President Biden said the leadership of the banks will be fired, and people who invested in both institutions will not be compensated under coverage. The Federal Reserve will also be conducting a review of the supervision and regulation of both entities. Investors swooped in last week to withdraw their funds as Silicon Valley Bank announced it sold some securities at a loss and would sell 2.25 billion in new shares to plug the hole in its finances. That set off a panic amongst customers who withdrew their money in large numbers. As for Signature Bank, it shut down amid jitters on the heels of Silicon Valley Bank shutdown in the context of what has been described as Signature's shaky financial position and its links to cryptocurrency. All right, so I believe Dr. Stokes here is talking about. I hope it's not clear, but I would assume he is equating. He's saying that the run on the bank and the U.S. would not happen in Jamaica. Not necessarily that there won't be any effect on Jamaica and its economy due to the run on those banks. I'm assuming that's what he meant, even though he didn't explicitly say that. So that's if that's what he's saying, like I totally agree. I don't think at least I haven't heard here on the ground. I don't think there's a fear in Jamaica of me going to Scotiabank or NCB and getting my money that it won't be there, or that if I write a check, my account will be empty because of insolvency in the bank, whatever. So I agree with that. There's no reason that would affect Jamaica. It's just like, why would that affect a company or a bank in Europe? It shouldn't. But where it is going to affect, that's like the next article that we're going to get there. It's hard to say specifically, right? It's hard to say how. I would almost say, if I were to have to answer that question, it's like it's going to affect us, but we don't know exactly how. Just like I believe these experts are saying that this and this is going to happen, and we're not going to go into a recession. It's just like, let's save it for somebody else, because it's not, that I'm not going to fall for that sort of thing. So we're going to, I believe this is the inflation article I wanted to read. Okay, so I have two inflation articles. I want to make sure these are the right ones. Yeah, we'll get into that. So inflation is definitely one of those ways. So before we get into the article, I just saw a couple comments come in. We'll just get to those real quick, and then we'll hop over into the next article talking about inflation and because remember, like I was going to say the cause of this was the rising interest rates, but you can't really say that, because it's also the mismanagement by SVB of their risk as well, and that caused a run on the banks, not only on their bank but also other banks, right? And so we'll get to that in a second. Let's get to the comments real quick. Chasing Bill TV says the problem will be the dollar, not the bank runs. What do you mean by that? In terms of the value, or what? In terms of the value of the US dollar? M. Graham says this fiasco will only serve to scare people. The reality is SVB failed due to incompetence and management's inability to properly invest. Customer deposits, loose regulations created this problem. Those are all, I would say, those are all in the pot. Those are all in the pot for sure. But I would think we also got to ask the question, is just like, what else is boiling up? what else is happening? What, like, this obviously was a big domino that fell. Are we to think that government has us under control, everything's going to be cool, they saved this bank, they saved that bank, other banks are saving other banks, and everything was going to go back to normal? There's nothing really else to expect as far as crises. I find that very, very hard to believe. And I'm not like a fear mongering conspiracy theory person. I just have, again, as I opened up with, we've seen this before, we've read this book, we've heard this music before. Veronica Take says, as a naturalized citizen since 1980, I have seen these crises before and they always bounce back. So calm down, peeps. When America sneezes, every other country catches a cold. Yeah, for sure, for sure. Like, and we got to think that, like, this is the market, right? It's just like everything is not gonna, it's like it's up and down, it's up and down. Like, the trajectory overall is like, yeah, it's gonna go like that, but there are bear markets and there are bull markets. We can't always recessions happen. It's just a part of the economic modern world that we live in. And it's a matter of, and I think that's really the premise of this discussion, is more preparation and understanding of that. And I'm not saying the sky is falling, this is the end of America, this is the end of the world as we know it. Absolutely not. I believe very strong. I'm very bullish on America, extremely, extremely bullish on Jamaica. And I don't think we're even close, speaking specifically of Jamaica, we're even close to hitting the potential of who we are as a country and who we are as a people. But I firmly do believe that we're on an excellent, excellent path. The point of this discussion is really awareness, preparedness. We are a community of individuals who are very pro-Jamaica. We believe in Jamaica. We want to invest here. We want to be a part of the growth, and we want to be a part of this upward trajectory that we find ourselves on. But also, we want to be prepared for the rocky roads ahead. And then also, when rocky roads do happen, and when recessions do inevitably happen, there are also great opportunities in there. And we got to remember that. And so that is what this, I would say, the underlying premise of this discussion is. And also, to drive home, I would love for it to be like, this crisis is over next week and Friday, tomorrow is the last day. But it's very hard for me to see that, in terms, like, just from what I read and my understanding of finance, and also my experience in 2007, 2008 recession, and going through that whole thing. It's just, let's be in a position of preparedness more than anything else. Optimism is great, as we should be, but being prepared and realistic about the reality that we find ourselves in, I think, is paramount. Caden Pat says, are Jamaican banks doing anything to protect themselves from these crises? Are the Jamaican government? So I will say this specific situation, I would say I hope it's like I should say, I don't know what, like, the reserve rate in Jamaica is. Like, so, excuse me, in America it's 10%. Like, you have to have 10% in the bank. Like, I don't know what it is here. I don't know what that regulation is, but it's not, Jamaica doesn't bank at the risk that the US does, because especially SVB it was a startup bank. It was a tech bro bank that really took on companies that were super, super high risk. And we got to think that a lot of the companies that were banking there, that they were backed by venture capital money. And a lot of those people who invested in those companies that bank with SVB were probably very, very scared. As far as what, I haven't heard Jamaica government react to anything. The budget debate is actually happening today. I don't think what's happening would affect that in any way. That would be very knee jerk, because Jamaica doesn't invest like that. Jamaica is a very, like, I would even say from the stock market perspective, like, I feel like it's very conservative in many ways. And I think that's why it has done so well over the last few years. And it's conservative and it's slow too. So it's not like the New York Stock Exchange, like boom, 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 trade this, trade that, high pressure. Like from what I see and what I understand, it's just like people are careful, which is a good thing. I at least that's my understanding and that's kind of my experience, and I think that's a good thing. But to answer your question directly, I haven't heard of any specific measures being put in place based on what has recently been happening. All right, let's read this next article. So this is from Mrs.org. Oops. Do it there in the comments. And we'll bring up the screen. All right. Looming bank failures point to more price inflation as real wages fall again. This was 2 days ago, March 14th. The federal government's Bureau of Labor Statistics, BLS, released new price inflation data today. And according to the report, price inflation during the month decelerated slightly, coming in at the lowest year-over-year increase in 18 months. According to the BLS Consumer Price Index, CPI, inflation rose 6% year-over-year in February before seasonal adjustment. That's down from January's year-over-year increase of 6.4%. And February is the 24th month in a row with inflation above the Fed's arbitrary 2% inflation target. Price inflation has now been above 6% for 17 months in a row. So I'll just pause there. And it's just they're just saying that, like, I'm assuming that the author is saying that like the increased interest the increase in rates have slowed inflation down, which is the whole point of why the Fed has been increasing rates, is to slow down inflation, right? So that's where we are. Meanwhile, month over month, inflation rose 0.4% seasonally adjusted from January to February. That's down from January's month over month gain of 0.5%, which had been a 6-month high. January's year-over-year growth rate is down from June's high of 9.1%, which was the highest price inflation rate since 1981. But February's growth rate still keeps price inflation above growth rates seen in any month during the past 30 years. February's increase was the 19th largest increase in 40 years. The ongoing price increases largely reflect price growth in food, energy, and especially shelter. In other words, the prices of essentials all saw big increases in February. For example, in February, food at home, i.e. grocery bills, was up 10.2% compared to February of the previous year. Energy services were up 13.3%, while new vehicles were up 5.8%. The largest decrease by far was found in used cars and trucks, which fell 13.6% over the period. This hardly returned car prices to 2019 levels, however. Used car prices reached 70-year highs throughout March of 2021, increasing year over year by 20% or more in every month from April 21st to April 22nd. As of February, there was no sign of price growth in shelter slowing down. Last month, shelter prices increased by 8.1% year over year, which was the highest growth rate since 1982. Month over month growth in shelter costs also remained among the highest we've seen since the 1980s. Meanwhile, February was yet another month of declining real wages, and that was the 23rd month in a row during which growth in average hourly earnings failed to keep up with CPI growth. According to the new BLS employment data released last week, nominal wages grew, with hourly earnings increasing 4.57% year over year in February, but the price inflation at 6%, real wages fell. So I guess before we get into the conclusion, it's like seemingly according to the data, you have the prices of goods going up, but wages declining actually. So that's not a good recipe for not a good recipe. Inflation is not falling. With year over year reading and price inflation down from January, we're likely to hear that inflation is falling. Many suggest that this, even through the CPI, actually went up from January to February. It is quite a stretch to say that price inflation is falling by any measure, of course, and by many who say it is falling really just mean the rate is increasing. Increase is getting smaller. Nonetheless, even if we were to find next month that the price inflation had turned negative during March, we would still be a very long way from undoing the price inflation that was uh, has occurred over the last 2 years. Indeed, since February 21st, 2021, the consumer price index has increased by 14%, and shelter price have increased by 13%. Average earnings over that period, on the other hand, increased by only 10%. Even worse, that is an average of earnings and tells us little about the millions of Americans on fixed income who have not been able to take advantage of wage inflation over that period. Many of those living off returns from investments are getting poorer as well. Since February 2021, the Dow Jones has increased by only 8%. Even with all the robust job growth we are told about by the administration and Federal Reserve mouthpieces, it is clear there is already no soft landing for Americans who have seen their spending power only fall over the past 2 years. Nor is there much reason to believe that rates of increase in price inflation will soon collapse, given recent events in the banking sector. With the failure of Silicon Valley Bank and Signature Bank over the weekend, the Federal Reserve is now under enormous pressure to moderate any plans for any continued quantitative tightening. Before the bank failures, market sentiment had led toward an increase of 50 basis points to the next FOMC meeting scheduled for March 21st to 22nd. Now, with many investors and banks fearing a liquidity freeze, the FOMC will be pressured to ease financial conditions for the sake of the banking sector. Even assuming that Jerome Powell is sincere in his repeated claims that he plans further substantial action to rein in price inflation, the last 20 years have made it clear that the Federal Reserve's policymakers quickly cave to demands from the Treasury Department that the Fed intervene to lower interest rates in times of financial crisis. Right. So I think that's very clear that they're going to stop increasing rates. Like, I think that rate hike is going to stop because it's going to put banks in further problems. Yeah, like it's a bad recipe, and like again, the author doesn't even say like what's going to happen and how this is going to. Well, I guess he does. Like, it's your money is becoming less valuable. You're especially specifically as you spoke to people who are on fixed incomes, and I think that's it's gonna hurt a lot of people. And this is what I mean by like let's educate ourselves on what's happening here and where things are going. And just even though like you hear jobs numbers are good in the United States, we're on a trending trajectory that inflation is going down, but it's not going down fast enough for us to feel the effects of things in the real world. And that's what the author's premise is in the article. At least that's the main thing that I'm getting from that article. And we're going to hop into another article on inflation shortly, get to some comments, and then we'll hop into it. Chasing Bills TV says SVB and FRB, few other banks have failed. Even Credit Suisse in Switzerland, the liquidity issue is not only present now in the States because bonds creating this problem have them sell to make up. This will lead to a rise of cryptos, CBDC, lack of trust in centralized banking system. The old fiat will fail. Perhaps, but this is gonna. That's one thing. Like a conclusion I came to is like people are going to go back to crypto. I think if I'm not mistaken, somebody can correct me. I didn't even check, but Bitcoin has been. Let's see here. I mean, it's not up crazy, but I remember Bitcoin, like when I was paying more attention to it, it was at like 18,000 per Bitcoin. It's up to 24,000. It's up 1.6% today. I mean, it's still down significantly. Still down significantly, but I believe people are going to be. It's up 22.7% in the last week. So there you go. Yeah, I think that's what's going to happen here. People are going to move back to crypto. Elizabeth Hall says the only effect this will have on it, Jay, is likely drop in tourism. If Americans lose their savings, they will not have money for vacation. Perhaps. I don't doubt that will happen, but it's also going to affect our interest rates. Don't keep in mind. So, like, what does that mean? So, like, I don't think I put it up, but you saw. So, it's going to affect interest rates. So, what does that mean? The interest rates are either going to hold or more than likely probably going to go down. Even an article I read before that the mortgages are I think it was in Germany. I don't think I brought it up. They were talking about the mortgage rates and then how they've already started to drop. Don't quote me on that. I don't have the article, but it's going to affect our interest rates as well. Will it affect tourism? Quite possibly. I'm not going to be, again, living in reality. People with if the America does go into a recession, living in reality, people are going to have less disposable income, and one of the first things to go for sure is vacations. Maybe people on fixed income can do it, but people are always going to travel. It's going to be less people for sure. And we also got to remember that, as I was saying before, is that when things like this happen, it's an opportunity for somebody else. People are going to make money in bull markets. People wait for bull markets. People have been waiting for bull markets, and they're going to do well. And this is something for all of us to think about as we move into, and like this is before that this happened, when people were talking last year about that 2023 expect a recession. Like that was one of the things that I kept hearing in 2022 like crazy. And so like kind of been thinking that in the back of my head, not wishing for it, but also preparing for it mentally and otherwise. Damian Maxwell says, I'm just at the beginning of this video, but people do realize that I guess he meant SVB and Signature Bank had exposure to crypto. The aim is to introduce CBDC. This will eliminate cash. They also don't want us to get rid of crypto, not for them to work alongside with them. Okay. Gotcha, guys. Yeah. So I can see people getting into crypto, but to each his own. We've seen. I just looked at like my Cash App here, and it's just looking like crypto is down 38% in the last year. Is it going to go down? Is it going to go up? Who knows? We'll see. All right, let's get into the next article, the next inflation article here. All right, this one is from the Observer. This one came out today. All right. Excuse me. All right, just threw the article in the chat there. Okay, this was from the Jamaican Observer. Inflation continues to ease, but analysts worry U.S. banking crisis could sway BOJ interest rate decision. There we go. I didn't even read this, and I made that that assumption. Inflation eased in February for a third straight month to its lowest level in more than a year, but analysts expect challenges in the U.S. financial system will have a bigger impact on any action the Bank of Jamaica may take about interest rates when its Monetary Policy Committee meets toward the end of this month before disseminating its decision on March 29th. Consumer Price Index, closely watched inflation gauge, rose 7.8% in February from a year earlier, down from 8.1% in January. The Statistical Institute of Jamaica, Staten, said on Wednesday it was the smallest increase since December 2021 and well below the peak of 11.8% recorded in April 2022. At the same time, monthly data showed price pressures persisted with inflation from January to February rising 0.5%, its fastest pace since October, and significantly higher than the negative 0.6% and 0% rate recorded in the prior 2 months. At 0.5%, the monthly inflation rate for February is at the top end of the average increase by the Bank of Jamaica is prepared to tolerate each month, but has been unable to achieve since mid 2021. It's trending in the right direction. It's good confirming data for the central bank, which can maybe start to evaluate loosening monetary policy, especially with what is occurring in the international markets. Keith Duncan, co-chairman of the Economic Program Oversight Committee, EPOC, told the Jamaican Observer in reaction to the inflation numbers from Staten. But analysts had a different view of the data and the impact the collapse of two large U.S. banks, Silicon Valley Bank and Signature Bank, may have on BOJ's next rate decision. Ahead of the collapse of those banks in the United States, economists had expected the Federal Reserve, the U.S. Central Bank, to raise rates by as much as 50 basis points on strong job numbers in that country in an attempt to slow its economy to take the wind out of the red-hot inflation. At 6%, the U.S. CPI is well above the 2% targeted Fed has vowed to achieve. But with the collapse of the two banks, some economists now expect the Fed to suspend its year-long streak of interest rate hikes when it meets next week. With the collapse of the two large banks since Friday fueling anxiety about the regional banks in the U.S., the Fed for now is expected to focus more on boosting confidence in the financial system than it is on long-term drive to tame inflation. That is a sharp shift from just a week ago when Chair Jerome Powell suggested to a Senate committee that if inflation didn't cool, the Fed could raise the benchmark interest rate by a substantial half a point in its meeting March 21st, 22nd. If the Fed maintains its rate, I expect the BOJ to maintain its rate as well when it meets later this month. One analyst told the Business Observer, however, if the Fed moves 0.25 basis points, I expect the BOJ will hold its rates. Okay, the BOJ will not move its key policy rates upward if the Federal goes more aggressively, more than 25 basis points. The analyst continued while requesting that his name be withheld for the article. Let me just make sure I read that right. The Fed maintains its rate. I expect BOJ to maintain its rate. When it meets later this month, one analyst told, however, the Fed moves 0.25%, I expect the BOJ withhold its rate. The BOJ will only move its key policy rates upwards if the Fed goes more aggressively. Okay, I see. So he's saying if it goes more than 25 basis points, then the BOJ will raise its rates. If it does the same, stays the same, or raises up to 25 basis points, the BOJ will continue to hold. Okay, interesting. Consensus among analysts is that the BOJ will act on data as it has promised, that the current data say we can actually watch it some more. The BOJ has been holding its key policy rate at 7% since December, but has indicated that come April 1st, banks will have to hand over $10 billion in local currency and $45 billion in foreign currency as part of their cash reserve requirement. Monies that will sit in the central bank's vault, earning no interest while it is still not available for lending. The hope is that this will see banks pushing up interest rates on the monies, which may remain to be on lend to achieve the BOJ's aim of getting higher interest rates in the economy to help push inflation down to 4% to the 4% to 6% range. It is maintained. It's mandated to maintain. But even though the BOJ has not moved rates higher in 2 months, it is not expected to raise rates at the end of this month unless the Fed raises rates by 50 basis points, which is believed to be likely at this point. The analysts say that BOJ's Monetary Policy Committee may start assessing whether the interest rate hikes over the last year may have happened too quickly, especially with the role of interest rate hikes played in the collapse of U.S. banks. With everything going on, the BOJ may be looking on and saying to itself, the pace at which we are moving interest rates could be dangerous. What the Silicon Valley Bank situation shows is that if you move too fast, you can create a lot of fair value losses in the market, the analyst noted. The fair value losses stem from debt securities the bank held losing value as interest rates rise. That is really the case why the banks have not increased their loan rates in Jamaica at the pace of the central bank, because if you move it that much, your loan loss provision is going to be really high because you're going to have people defaulting, the analyst pointed out. Still, inflation remains a concern on the 10 categories of goods and services from which Staten collects data on price movements to calculate its consumer price index. Only 2 declined from January to February: the heavily weighted food and non-alcoholic beverages, as well as the division which measures the cost of information and communication services in Jamaica. During February, most of the inflation was driven by higher rates for electricity, which outweighed declines in the prices of vegetables, tubers, plantains, cooking bananas, and pulses. The decline in the overall food bill was, however, at a slower pace, negative 2.4% in February, than the negative 5.8% dipped in January. Still, food prices are up 11.3% over last year. That is separate from the restaurant meals, which have gone up at a much faster 15.6% over the same period. Yeah, inflation, boy. So, yeah, definitely stand corrected in terms of the rates going down. It's looking like the rates are going to stay the same here in Jamaica, and that's good. I didn't know that they kind of went their own way in terms of keeping not increasing rates as fast as the U.S., which is a good thing. And in hindsight, it seems like they made a good decision in that, the BOJ. But we'll see what the BOJ has to say at the end of the month in terms of whether rates go up, stay the same, etc. But like I said, like the article was saying, it seems like it's going to depend on the Fed rate meeting in a few days, next week, as a matter of fact. The next week, yeah, next Wednesday. So we'll see. We'll see what happens. We'll see what happens then. But yeah, that's kind of where we are. I hope everybody got an education. I know I did in preparing for this, and then reading these articles with you all. Things are still unfolding, super fluid situation. I think it's important that we all pay attention with what's happening, and also like not too close attention, right? Like just a healthy amount. We don't want to get too caught up in the hype of all this, and there's hype on both sides. There's hype on the side that the sky is falling, which I don't believe the sky is falling. There's hype on the side that everything is fine. The job numbers are good. There's no recession coming. The Fed is going to handle this. Trust everything. Every optimist is staying on the news. I'm not a believer in that. I think we just need to have a healthy understanding of what's going on, and just so we can make the proper personal moves in our personal finances, and those that are in business, are in investing personally, that we are in a position to make the best decisions possible. Because again, I do believe, like in any recession, or specifically financial crisis, there are opportunities to be had. It's just hopefully we can be in a position to take advantage of those opportunities, whatever they may be. If you have any questions, any comments, let me know. We'll be more than happy to discuss But I just wanted to kind of get this going. This is definitely not going to be something like a one-off as things start to roll out and over the next few weeks. And this just happened literally a week ago. Today is like when things really started rolling, and the bank failed a week ago tomorrow. So this is definitely going to be something that's going to be part of our discussion here. As I mentioned earlier, the budget debate is happening, and I believe Negril is the budget debate here in Jamaica. And I believe the Negril is on the docket today, talking about what's the investments that are going to be slated for this part of the country. So I definitely want to. I'm sure they're finished by now, I would assume, but I definitely want to go read up on that and be prepared for Sunday to discuss whatever projects or plans that they have in the pipeline, and continue to discuss everything we can about finances, the world of finance globally, and specifically how the global financial situation affects Jamaica and also investments here in Jamaica. So yeah, let me know any comments. If not, we can start closing out. Credit Suisse might be the next collapse. Yeah, I'm sure. Fingers crossed. We don't need any more banks collapsing. But like I said, we've seen this before. We've seen this movie before. I'll stay on top of it. The team's going to stay on top of it over the next few days, and we'll be live streaming on Sunday for sure. Candice, if you're still there, I forget what we're supposed to be live streaming on Sunday. And she told me just this morning. If you could just remind me what the subject is on Sunday. And I think it's farming. I remember it's farming. So we're talking about farming on Sunday, and we're having a guest come on farming. Correct me if I'm wrong, Candice or Havrika, if you guys are in the audience. And that should be fun. That should be a really, really fun one. Getting a different perspective. I'll make sure to get the title and thumbnail and everything like that up tomorrow. No, by Saturday. If not tomorrow, but by Saturday. So everybody's prepared. Give everybody like a day in advance. So Candy says farming in Jamaica. Yes. And that seems to be a very popular subject. And we're going to be talking to a local Jamaican farmer from the other side of Jamaica. So it should be a very interesting discussion. I'm excited by it. But of course, we're going to definitely be talking the world of finance and banking, because that is top of mind for all of us and is going to affect all of us. All right. If there's no further questions, we can clip it off like that. Candy says farming in Jamaica with Nicola Shirley Phillips. That's our guest on Sunday. Very excited to have her on. Can't wait. You're welcome, Kick Rocks. Thank you for joining. Thanks, everybody, for joining. This was a good one. This was an informative one. Hopefully, everybody enjoyed it. If you haven't already, hit that like button. Definitely helps. Want more people to see this. We're really rocking and rolling with these lives, and also the uploads on Saturday. We have another one coming out on Saturday. From ThropX. It is going to be the Planning Authority. If you were at ThropX, this was a really, really awesome one. I think a lot of people learned a lot from this session, and two expert people on. It was very centric to the building code and regulation here in Negril, and they are from the two guests, two speakers we have are from the Negril Green Island Planning Authority, which is a very unique body to Jamaica, and I believe they're the only type that exists, because we have a very delicate ecosystem here with the Great Morass, which is on the other side of the beach, and they are both, and that and we got to keep in mind they're separate from NEPA, from the National Environmental Planning Agency, which is a national body that focuses on the environment and making sure that building regularities and mining and all of that really puts the environment first. And so the Negril Green Island Planning Authority takes that one step further, because Negril is such a unique ecosystem. They created a body specifically to deal and protect with the unique ecosystem and nature that we have here in Negril. So very, very interesting topic on Saturday coming up. And if you're considering building, developing, investing in Jamaica, this is definitely one that you don't want to miss. Scotty Beamer says, really enjoying the ThropX series. Awesome. Really happy to hear. Glad you're enjoying them. We're having a good time putting them together and reminiscing on the good times that was ThropX 2022. All right. Thank you, everybody, for joining. This was awesome. Karen, nice to see you. Thanks for hopping on. And we'll see you on Sunday at the live stream, 12 o'clock on the beach, as usual. Hopefully, it's not raining like it has been the last couple of days. Everybody, enjoy the rest of your week, and I'll see you in a few days. Peace.